HUL. That one is a stock that everyone's watching out for because they've gone ahead and formed an independent panel to evaluate the future of its ice cream business. And talking about HUL in particular, let me actually bring on board Snehi to tell us what HUL is planning to do and why such a move coming in on the counter. Snehi?
Well, yes, so the share of HUL, the stock price has hit a record high today on the back of this news flow, and it's also helping Nifty recover beautifully in today's trade. So HUL has formed a committee of independent directors to evaluate the future of its ice cream business. This committee will make recommendations to the board for final approval, and remember, HUL's ice cream brand includes Quality Walls, Magnum as well as Cornetto. Now, what are analysts making of this development? They say that HUL's ice cream business contributes about 3% to its total revenue, whereas it contributes 13% to the global parent, which is Unilever's revenue. Therefore, any decision regarding the ice cream business will have a smaller impact on HUL's overall operations and earnings and sales compared to the parent Unilever. HUL holds the second position in the Indian market. Remember, this is after Amul. Amul is number one. HUL is the second, holds the second position in the market with a 15% share in the organized sector and 9% of the total market. It also competes with the likes of Vadila, Mother Dairy, Naturals, Have More as well as Baskin Robbins, and the ice cream business could be valued anywhere between 6.5 to 8,000 crore rupees and at a sales multiple of 3.5 to 4.5 times. This is what we are getting from analysts. Now remember, HUL earlier in this year in July sold off its water purifier business because it wanted to focus on its core business. So going ahead, what happens if HUL also decides to sell this ice cream business? Well, any decision to sell this ice cream business would be small but incrementally positive coming in for HUL, as it would free up some capital invested for focusing on the core business, and this should also be accretive to the return ratios in the future. But well, yes, on the news of this committee that has been formed to mull about this ice cream business, HUL is holding up pretty smartly in today's trade.
Well, yes, indeed it is. In fact, let me toss it to Deepak as well. Deepak, any comment on this perhaps impending transaction at HUL and the overall staple space if you've been watching it carefully?
I haven't been watching it much, to be honest. I think we've got an interesting move, but they don't make ice cream. They actually make frozen dessert. They're not allowed to call it ice cream here in India, but globally they do have a thing. So they might actually have to either sell the ice cream business to somebody else globally, and then the only way in India that it would work meaningfully would be for them to demerge HUL into HUL, and then the frozen dessert business is a separate business, and then the new buyer takes over. This is how Indian markets prefer demergers like this to happen, because otherwise it would be a sale to a parent entity, and that does not fly very well with shareholders because it may not be valued. India is valued at 66 times, 70 times earnings. Nowhere else is Unilever valued at that much, so no buyer will actually want to pay the Indian level of valuations for that business. So I don't think that will fly. So they'll have to demerge it. So that may produce some kind of value unlocking if there is some capital freed up or something that changes. But I don't expect this to actually result in cash inflow for HUL. So while everything is like up for grabs right now, we don't know much more than just the announcement. I would say let's wait for this to develop worldwide before we take a call on what happens to the India business.
Right, very good afternoon to you, Deepak. Good afternoon as well, Nuresh and Kunal. And let me come to you actually, Nuresh, and get your view coming in on HUL as well as the FMCG pack, because a lot of hopes are riding on that particular segment post-elections, and now everyone's seeing that there is some sort of a comeback coming in the rural sector. How is the FMCG index looking to you? And in that basket, HUL, keeping aside of the news flow?
So being bullish on the whole segment, and if you look at it right from the election times, it's FMCG across the board. The index has done well. Now, if you look at HUL, you compare it in two bases. One is what has been the highs for the last 2 years. So that was roughly 2,700, 2,750. The high in 2021 was closer to 2,900. And it was the first one of the block post-COVID. That's the time it made 2,600. So if you look at it from, say, May, June 2020, 2,600 till date now, we've not gone anywhere. It's just a 10% move over the last 3-4 years. That indicates there is a lot to catch up. It has gone through a sideways move for a long time. Same is the case with an ITC. The last 1 to 2 year returns have been low, whether it is a Dabur, Marico, and the markets are clearly showing a defensive tilt. So it is Pharma, FMCG, IT, which is outperforming the benchmarks. So in that, HUL still looks good for a move towards 3200 to 3400 in the short term, and all the other names as well.
That's the flavor of the market, defensives right now, but what's holding up is Nifty Bank. Take a look at that 400-point recovery. It's outperforming the frontline index by a huge lot because that index is up almost 1% versus the frontline index, which is up just 0.2%. Kunal, will it give you enough confidence to say that Nifty Bank is out of the woods now?
Well, not exactly, but yeah, I think it's a good sign that the Bank Nifty is outperforming. And I think the other good part about the market today is that it's outperforming in in line with strength, which has come back into the FMCG and the Pharma index, which I think has been the flavor for the markets for the last few weeks and months, where you saw FMCG, Pharma, and to a larger extent even IT stocks outperforming. But today I think the Bank Nifty is adding as a good support factor for the markets. Now, in terms of a breakout or a turning point for Bank Nifty, in terms of the short-term levels, the Friday's high could be a critical litmus test for the banking index to get into a breakout mode, as well as convert this today's rally of 400 points into more of a trend. That level would be around 51,400 on the Bank Nifty spot levels, which means we should be looking at least another 350 to 400 points rally for the Bank Nifty before it gets back into a breakout zone and potentially a start of a fresh uptrend.
Deepak, coming to you, let's talk about what's exactly happening with PFC. That particular stock is actually down about 6% or so. We've seen the likes of PFC as well as REC enjoy a good run. But do you think this run is only limited right now, or fundamentally nothing has changed and we're just seeing a bout of profit booking in these names?
To be fair, I think the stock's been weak for a while. We've owned it, so we probably own a little bit of it even now. But the stock's had a phenomenal run, so having a 3% to 5% correction on it is not really a big deal because it went up similarly. So the fundamentals in this stock has always been good. When it was great at a 8 PE 10 years ago. Then it became a 2 times price to earnings. So the price kind of fell and the earnings went up. And now it's gone back up to like 8 or 9 times earnings. So that way, fundamentally, I don't think this is a meaningfully, overvalued kind of a stock. But in general, I think here the flows into the stock and the fact that the earnings will take time or take a reasonable amount of time to start getting demonstrated is going to be one of the factors that drive daily stock prices. So I don't know where it is, whether this 6% is the end or whether there'll be another 6 or 10% falling and all that stuff. But I know that fundamentally speaking, certain things have changed for the company. There is an increased focus on renewables. I think that was reiterated last week as well. And as India gets more and more, energy efficient and perhaps distributed away from coal and oil and gas, we're going to see PFC and REC kind of perform a key function in ensuring that our move away from those fossil fuel-based technologies, energy sources, is going to be funded and is going to be kept in play over the next, next decade. So I expect, of course, the stocks to be volatile as we go along, but I don't think the fundamentals are in bad shape in any of these companies.
There could be ups and downs, fundamentally nothing wrong, and in the long term there are clearly prospects which are looking bright for some of these names. But Pharma as a pack is quite interesting, Naresh, and Alembic Pharma, Glenmark Life, even other names from some of the smaller pharma names are doing quite well, like Spark, etc. What within Pharma, and especially the mid-cap Pharma, would you pick up?
As of now, a lot of these names have done really well. Out of that, say Alembic Pharma is yet to cross the recent highs, so that looks promising. Other names like Granules, etc., have already made quite a move. In the large cap space, Dr. Reddy's has gone nowhere and is coming to a retest of that 6,500 to 6,600 mark. So that would be interesting in the large cap space, and in the mid cap, small cap, it would be Alembic Pharma. The rest of the names like Glenmark have been moving up for the last 3-6 months and look a little overbought. So it could be a pause in the overall pharma space, very selective moves going forward.
Right. Kunal, coming to you, and let's talk about exactly what's happening in the auto sector. No doubt today we at ET Now did celebrate the World EV Day, and we got to all the stakeholders from the EV arena, be it four-wheeler majors in the electric vehicle space, or the two-wheeler, or the tech players as well. But Kunal, how is the auto pack looking to you right now? Subdued today, but over the last few months also, Autopack has been the talk of town because things don't seem to be going well when you talk about the inventory levels or so. But on the charts, how are they looking?
Yeah, I think many of these auto stocks have now gone into a corrective or a profit booking mode. So, for example, M&M, which was trading at 3,000 plus levels, that stock has corrected by a margin of 10% broadly. Tata Motors, I think that stock also, I think the last 1 week or so has corrected by more than 10%. We've seen the correction shaping up for the likes of Maruti broadly over the last 2 to 3 months. So yes, major part of the performers from the auto pack, they have gone either quiet, they've gone into a consolidation, or they've seen profit booking, and that too by a decent margin of 10% for these large cap names. But then there are newer candidates which have emerged as a potential breakout or turnaround. For example, you've seen Hero MotoCorp doing up pretty well over the last 1 week or so. The stock rallied up some 8% to 9% from its previous swing lows. And even the last 2-3 days of the heightened choppiness in the markets, we've seen Hero MotoCorp remaining a bit more sideways, which is again an indication that the stock could probably see one more leg of breakout on the upside pretty soon. Ashok Leyland is something which has done exceptionally well over the last 2-3 months. That stock is also holding up to the levels of 240, 260 broadly. So I think even this stock at current levels of 240 could be an attractive contra bet.
Okay, point taken. So those are the contra bets that you should watch out for in the trading session. But here are the commentary coming in from some of the biggest EV players that joined us on the channel today.
It's early days to be able to determine the resale value of products. Today, we don't even have the organized database to look at what is the resale value of products. But I think as the industry will grow, as the number of models that will be made available will change, price points today are straddled only in a certain segment. As the number of models at multiple price points will be available in the industry and category, automatically that will set a pace and direction for resale value. EVs is the answer. We are committed to that. We've already spoken about and said that in 2025, we will be bringing out our first set of pure electric or born electric vehicles to the market. And of course, we have a much more robust plan in terms of product offerings that we will have over the next 3 to 5 years.
I personally feel that the mass segment SUVs, especially in a price bracket anywhere between 15 lakhs to 25 lakhs, is where there'll be a good playground for EVs. And this is where people will find interest as far as EVs are concerned. Yes, on the certain state governments which are today supporting the EV in terms of registration, low registration or a zero registration cost, I think if state governments continue to support, extend their support for some more time till we reach a level where customers find this whole gamut of EV sustainable. I think till then I would expect the state governments to support, and this will definitely help faster adoption of EVs.
Buying an electric motorcycle or any two-wheeler, it's a no-brainer in terms of cost. So if you look at the fuel cost increasing in India, and even look at the ICE bike sales cost as well, for last several years, let's say for 7 years, the cost of a bike which used to be 30,000, it has gone up to even 1 lakh. So ICE as a bike, the cost is increasing over the years, and on top of it, the fuel and extra service costs as well. But if you look at the electric motorbikes or electric two-wheelers, the cost of the bike or the scooter is coming down over the years. And when, if you talk about the battery cost of the battery technology, because EV is more about technology. And as we advance in terms of technology, the cost keep coming down.
All right, so catch those managements and more on through the course of the day on ET Now. But thank you so much, Deepak, for joining us on the show and also talking about HUL and also giving us a slice or a view on what exactly is happening with PFC REC. But coming back to you, Kunal and Naresh, what are your closing trades? Naresh, go first.
So continue to be more defensive, looking at the FMCG space only. So that would be a buy on
All right.
ITC, which has come very close to the breakout point of 515, which was the recent high. So I would go with ITC in the FMCG pack.
ITC in the FMCG pack, and Kunal, which is your closing trade?
That'll be a buy on Havels. That's a chart which I believe is trying to come back into a bottom formation mode at the sub 1900 mark. So it looks attractive in terms of a risk reward.
If you like this video, then like, share and subscribe to ET Now.